what is happening in Southeast Asia, travel and hospitality scenes. So these are, once again, some experienced veterans in the industry. Our first panelist is Bill Barnett, the founder and managing director of C9 Hotel Networks. Bill is considered a globally recognized hospitality, tourism, and real estate advisor, prop tech entrepreneur, and the author of 4 books on travel, hotel, and property. He has over 35 years experience in hotel operations, development, and asset management across Asia Pacific. He is the founding advisor of the Phuket Hotel Association and leads an annual Asian sustainability event. Welcome, Bill.
Hi, Rick. Greetings from the Phuket Sandbox.
Very good. Our second panelist is a longtime friend, James Kaplan, who's the CEO of Destination Capital. James has 35 years experience in global hotel and resort development and acquisitions with a primary focus in Asia Pacific and around the globe. He's worked for such companies as Marriott, IHG, Fairmont Raffles, Minor Hotels, to name a few. James attempted to retire in 2019 to focus on education in rural areas, only to be asked last year to run Destination Capital, a private equity firm focused on acquiring distressed 4-star hotels and supported by the World Bank, IFC, and the United Nations World Tourism Organizations for its sustainability and ESG efforts. The Philippines is not a new place for James since the late 1980s. The Philippines has historically been a focus for James, and he maintains a close connection and affinity with the country. Great to have you both this afternoon, James and Bill. Welcome.
Thank you so much.
Thank you, Rick.
First question, we'll maybe have Bill answer this first and then James. Asia Pacific was one of the first regions to go into lockdowns, but it may also be the last to open up. When do you see the region's travel industry fully recovering after the pandemic? And what have been the lessons learned by the travel and hotel industry from this pandemic experience?
Yeah, where do we start? Yeah, where do we start with that? I mean, COVID's gone on longer. We just can't get rid of it. I think it's like, we couldn't get rid of disco. We can't apparently get rid of Donald Trump. So we can't get rid of COVID as well. So God, when is it going to go away? If we would be sitting here a year ago, we'd be sitting and saying, we were looking at China coming back quickly. We were looking at a much quicker return to travel. And I think when we're sitting 17, 18 months into the pandemic, we're saying that it's going to be a longer process. And our thinking is, again, we predict cycles. And I think we're at the beginning of a new cycle now. And when we talk to hotels and everything else saying, what is the trajectory of recovery? It's obviously going to take 3 or 4 years to come back, for broad tourism to come back in these markets. It's going to be, if you're a hotel, it's really like opening a new hotel, and that trajectory of coming in perhaps a price led. Everybody we talk to across the region, they're expecting that rates are going to be floating, trying to get business. There's a lot of competition out there as well. So it's going to be a price led recovery, and it's going to take longer than we thought it was. Okay. Some markets will perform better than others, but airlift will determine everything. You can't stay there if you can't get there. And maybe the final messaging is it's a two-way street. Asia can open, Asia can have hotels open, everything else, but what are the requirements are travelers going to face going the other way? I sit in Thailand right now, and we're in a red zone for the UK. When travelers are going back from Thailand, they can come to the Sandbox, but they face restrictions the other way. So again, it's a very complicated process, not something we've ever faced before.
Thanks, Bill. I mean, clearly some veteran advice there, and sometimes we sit here in the Philippines and think we're alone in this pandemic, but clearly a lot of the Southeast Asian markets have been hit extremely hard. So thanks for your thoughts there. James, what's your view on the recovery and lessons learned?
Yeah, well, I think to echo Bill's statements, I sometimes feel like a captain of a ship navigating through waves and variants and inconsistent government policy and regulation. And I think it's really been the inconsistency of policy around the world which is causing this sort of paralysis of travel. You've got, one extreme here in the United States where the place is open. You don't need a PCR test to get on an airplane and fly from San Francisco to New York. You can go to Mexico pretty easily, travel around without a problem. Whereas, in Hong Kong or Australia, China is a complete lockdown. You can't travel anywhere. You can't even hardly leave your house. So there's these very large differences in government response to this pandemic. And unfortunately, each government's sort of taken the high ground that, their way is the best way, and that having any kind of opening up can only lead to political fallout. So it's become highly politicized, unfortunately, and the medical community has been largely silent. So that's keeping people out of the travel business. What we're hoping for is 2022 for governments to finally recognize that keeping people in jail isn't the way to grow an economy. We're hopeful that in the middle of 2022, different governments will look at things like the Phuket Sandbox and say it worked, and there is a way to move forward, and it is a great model. I think it was touched on the Philippine panel earlier that it's a model that people are looking at. I think it's a good model, and that it can expand elsewhere. So 2022, we're looking at recovery. Airlift, of course, is going to be important. Domestic travel is going to be important. The challenge with domestic travel is primarily weekend. So, for example, we have a hotel in Hua Hin. It's been open now. We're doing high 40% occupancy, but if you look at what that means on the weekend, it's full. It's just empty during the midweek. So people will travel. People do want to travel. It just needs to be made easier. People are kind of paralyzed right now to get on an airplane and travel. So mid 2022 opening, 3-year stabilization. These hotels have to ramp up, like Bill mentioned. 2025, quote, back to normal.
Yeah, thanks, James. I've known James for many years and never have seen James in one place. I mean, he's probably the most traveled person I know. So, so he must be driving him crazy. So, thanks for your perspectives there, James, and Bill. Bill, a lot of talk about this Phuket Sandbox. I mean, what is it? For those in the audience that might not be familiar, what's been the success of the program, and could that be replicated in a place like the Philippines?
Sure. I think the Phuket Sandbox, it's interesting because it's something which is unique. It's, Phuket's the only place between, the only resort destination between Maldives and Hawaii where you can come on holiday right now and actually enter for international travelers on a reasonable basis. The Phuket Sandbox is premised that it allows international travelers to come who are vaccinated, fully vaccinated travelers to come to Phuket. It does have restrictions. I think what happened prior to the Sandbox, prior to July 1st, travelers who wanted to come back into Thailand would have to do a 2-week quarantine, 14-day hotel quarantine, stay in their hotel room the whole time, and they were allowed to come back in the country, okay? The premise of the Phuket Sandbox is that you have to apply for a certificate of entry, but you fly into the country, you fly into Phuket direct. Phuket, about 50% of Phuket's airlift or travelers arrive internationally. We have great direct airlift. So you're allowed to come in the country, and it's a 14-day stay. You can come for less, you could come for 5 days, you could stay any other time, but there's a restriction that for 14 days before you travel onwards. Now that's changed recently. We'll talk about that a little later. But basically you have to spend 1 night. When you arrive, you have to have an antigen test or tested to undergo that. You stay in your room, and after that, you have a negative result, you're allowed to travel throughout Phuket. You can enjoy your holiday, you can go golfing, you can go to the beach, you can do anything you want, okay? There's certain countries which are allowed to come in and certain countries which are not. And if we look at the success, the Sandbox program rolled out the 1st of July. So for the first 60 days, we've seen about 26,000 travelers, okay, come into Phuket, and about $50 million in revenue directly generated from that, okay? But I think what's important for people to understand, the Sandbox is not just about tourism. The reality of the Sandbox sitting on the ground, we like to say it's all tourism, is it's allowed travelers. And many of these travelers were, again, as Bruce talked about earlier, families being reunited. People who lived in Phuket, and rather than spending 14 days in a quarantine hotel, coming into Phuket, spending 14 days, and then moving on to Bangkok. You also had, a variety of other things. So tourism is a relatively large portion of the Sandbox. It's not only generated from that, element as well. And from Phuket, you've got to understand Phuket domestic, Phuket is very reliant on foreign tourists, okay? About 10% of our market share is domestic travelers. So Phuket had no choice. It was an ideal venue. I guess in the Philippines, you'd say you could do something like that with Cebu because you need direct airlift to be able to fly in. Otherwise, it's extremely complicated. But what's happened really from a business perspective, it's we've seen business people coming back in the country. We've seen people transacting hotels and flying and having business meetings. Their partners flying in from Bangkok as well. You're seeing families get back together. You're seeing people who actually want to invest in the country as well. And we have tourists coming back in, but it's not really dominated by tourists as well. So I think when we look at other things about what our learnings are from the Sandbox is, it's going to fix the hotel market just a little. You know, prior to the Sandbox, Phuket hotels, we have about 88,000 registered hotel rooms. Occupancies were single digit, okay? The hotels were bleeding. Now, many hotels are running in the mid 20s. For hotel owners, they're not losing as much, but they're not making any money either as well. So what we're learning from the Sandbox is that we have to learn to live with COVID. I think one of the remarkable things is Phuket as an island is about 80% vaccinated now. And this is the first time we see the private and the public sector get together and actually work together. You had hotels opening their ballrooms and having vaccinations going on, and everybody is working together to get the Sandbox open. And that's the important messaging now. Private, public sector working together, getting vaccinations done. But what we learn now is, just one final point is, you can't really look at the number of COVID cases because that's not the best metric. We have to look at this with different, COVID's gonna happen anyway. It's like, you know, again, what matters is hospital capacity and the number of people who are being hospitalized in serious cases. I think that's where the metric tourism has to learn. We're not gonna eradicate COVID, okay? It's not gonna happen today, tomorrow, the next day, but we have to travel. We're gonna have to learn to live with COVID. Rick, over to you.
Yeah, thank you, Bill. It's, I mean, clearly some ideas for the Philippines to possibly look at, and some, you know, scheme like that into a Cebu Boracay, I'm sure would be music to a lot of the owners' ears. So thanks for the comprehensive description on the Sandbox. It's definitely an innovation, and nice to see government and the private sector working hand in hand. Paolo is going to be doing another poll question for everybody, so that's going to pop up on your screen. So please answer that poll while I go into the next question. First up is James. James, what's the long-term impact of the pandemic on the traditional business model of hotels? There's been an emphasis on non-room revenue streams, such as food and F&B, and possibly, you know, office co-working. Is this shift sustainable?
Yeah, I think it's a good question, Rick. I think if everybody in this webinar sort of steps back for a minute and kind of looks at how they're living today, they're doing things that they may have started doing a couple of years ago. And COVID has really accelerated a lot of these patterns. I mean, this phone call, this webinar, for example, would have been probably taking place at a hotel in Makati, and we all would have hung around in a ballroom and had, you know, some sandwiches and listened to Bill Barnett's humor. But now we're doing it on a webinar. I think, you know, things like home delivery, all those activities have been accelerated by COVID. And one of the more interesting accelerations has been a greater appreciation for the environment. There was a comment made earlier about the beaches in Boracay and what they look like today, and people want to go and travel and go there. Well, the reality is, you know, with industrial over tourism around the world, we've done bad things to our environment. So I think the first big change we're going to see is an appreciation of environment and people really understanding that this is something we need to protect. What does that mean for our industry? I think it means that there'll be fewer trips, but longer stays, higher quality trips. I think there'll be more multi-generational travel. You're going to see hotels designed for more lock-off rooms, an area for families to travel together. I think people have been home. Parents have enjoyed watching their children grow, play music, play sports. They always in the office, they didn't see certain things their children did. There's a new appreciation for that. Multi-generational grandparents seeing what their grandkids are doing. So travel will become much more of a family event, longer period of time, and hotels are going to need to be designed that way. I think the other interesting thing with hotels that we saw was that the lobby was always sort of a dead revenue center. It was a big lobby you walked into, you checked in and you left, and then lobbies increasingly became offices, primarily in the urban areas. That trend is actually really going to accelerate, where that co-working shared space, lobby, airport lounge kind of revenue generating opportunities is definitely going to accelerate for sure. And then the last thing with hotels, which I find really interesting, is with COVID and health and safety, things like, you know, we don't wake up in the morning and think about air conditioning systems. But air conditioning systems have to change. That's one of the problems where the virus gets spread through different air conditioning systems. The more modular systems and that type of thing are going to become much more popular and quote the standards for hotels. That'll be very, very important. So those are some of the things that we see happening. Food and beverage. I mean, people will still take pictures of their food, and buffets will come back, but the revenue side will stay pretty much balanced the way it is that we've known it.
Thank you, James, and keep sending those pictures of the food and in the lobby in the San Miguel's. Bill, long-term impact from the pandemic and non-revenue streams. What's going to happen with those?
I think the likely outcome of COVID is it's accelerating trends we were already going to see. James talks about it, in terms of behavior changing. Certainly, there's the logical outcome with COVID. Probably resorts will come back first. Urban hotels will be a harder sell right now for business traveler. You'll combine business trips with resort trips. I think resort destinations will come back quicker. I think one thing we understand is the labor market. To me, this is critical. I think that, we've already seen this in Asia where, in the old days, we'd see, staffing ratios to rooms, 3 staff, 4 staff, 5 staff. Hotel owners are going to have a fear factor coming out of this. They're going to be worried this is going to come back, and everybody's going to look at the labor cost and say, we've got to adopt practices from the West. We have to have lower staffing ratios. We have to have multitasking. We have to have a more efficient business model. And I think there'll be a dynamic shift in the way hotels do business, especially even with 2-3-star hotels with contracting labor, and even for salespeople, perhaps working, being clustered in a different manner and working from home. I think there'll be a lot of change. But these changes aren't just from COVID. These were coming anyway. Asia's been living on borrowed time because in terms of hotels, because labor costs are going this way and your room rates aren't growing at that pace, right? So this really justifies the model and becomes a sounder economic model. We're getting back to the hotel business rather than creating vanity and everything else. So I think logically that's going to shift. I think it's interesting for me what's going to happen to hotel management companies, because hotel management companies, I talked to somebody from a hotel company, the best we can do is we can give you a logo and a sign and we can perhaps hook you into a GDS. We don't have enough people to serve you anymore. So I think the relationship with white labels, the relationship with franchising is going to also shift us into a Western model, where we're seeing more hotels in North America or Europe with franchising and everything else, because hotel companies can't service. They don't have any left in head office anymore. So I think that's going to be a critical shift as well. So again, we're going into different models, but again, it's cyclical, and there are models abroad that we can see that we're going to be adapting here in Asia.
Now, some astute thoughts there, and Bill and James clearly are global. You got a global perspective, and they're old Asia hands as well. So they've kind of taken the rough with the smooth. So it's good to get their thoughts. So next question, James first. How are you seeing private equity and M&A deals in Southeast Asia hotel sector as we move towards the end of the pandemic? And what's your advice for hotel owners who are looking to sell, repurpose, and thinking about the future of their properties? Clearly, we haven't seen both a situation like this since 1997, the Asian financial crisis, but also we probably haven't seen an opportunity like this. James?
You're asking me to describe the universe and give 3 examples, Rick? No problem. I think if you look at some of the facts first and then get into how the future will evolve, I think that it's interesting. In the first half of 2021, there were about 60 hotel deals done in Asia Pacific, including China. It was just short of $4 billion of transactions. It works out to about 10,000 rooms. Now, the interesting piece of information with that is about 85% of those deals were done in 3 markets, Japan, Korea, and China. So that really means that there were about 1,500 rooms transacted in Southeast Asia in the first half of 2021, which is nothing. So there really have not been many, quote, deals done in Southeast Asia. And the reason partly is because, owners are finding it really challenging to navigate through a zero cash flow environment. And it is a zero cash flow environment. How do you do that? I mean, you close your hotel and you work with your lenders. So bank forbearance has been a big factor in why we haven't seen that many transactions. And now the banks are running out of patience and the governments are backstopping the banks. At some point, there needs to be a break in the logjam to unleash some of these transactions. And, there will be survivors. There are well-capitalized companies We all know who they are. There are companies where hotels are not their core business. They need to raise cash to support their core business, and they will sell. So I think that looking at what's been going on in the past 12 months, the market, we call it stressed but not distressed. We believe that early next year that vortex will come together with the lenders and the governments realizing that paralysis is not a sustainable economic model. They need to do something, and kicking the can down the road is not the answer, because even when travel starts, it's not going to be flipping a switch. It's not going to be, today is Thursday and tomorrow's Friday. We're going to be fully occupied and everything's going to be back to normal. It's going to take years to recover, years to rehire and retrain people, and years to pay down this mountain of debt that's been accruing. So I think Q1, Q2, you'll start seeing more transactions. The last part of your question, I believe, was what should owners be doing to recapitalize and reposition? I think that there are private equity players out there who are interested in investing in this business, but don't necessarily want to own forever. So there may be methods of, selling to them with buyback options. If you look at $24 billion roughly worldwide was raised last year for hospitality and private equity. In 2020, about 50% or more, about 55% of all hotel transactions in the world were private equity. Of that, about 21% of those were resorts. We're definitely seeing a move to maybe 35, 40% of resort transactions, to echo what Bill was saying about resorts being the first to rebound and leisure being the first to rebound. So I think that those owners with resorts should be in a pretty good place to talk with private equity about partnering with them, about selling all or part of their business with the ability to buy back in, or they may just want to get out. The question is going to be pricing. In Asia, often owners look at land valuations as the main value of the property. The private equity guys could care less about the land value. They're looking at purely an EBITDA multiple and buying on an EBITDA cap rate multiple and then getting out at a different cap rate. So they're going to have to be some discussions on value, but that's a separate conversation. So I think in summary, you're seeing forbearance by the banks has restricted the ability for transactions to happen in Southeast Asia. There's a lot of money out there to invest in hospitality. It is an asset class that people like, and it is an asset class where we will see more transactions in 2022.
Thanks, James, and thanks for your concise answer to a very large question. So, Bill, your thoughts on the private equity M&A deals in the Southeast Asia hotel sector, and advice for the owners who are looking to sell or recapitalize, repurpose, et cetera.
I think it's interesting because I was around in 1997, and I mean, there just was no liquidity in the markets. You had currency crisis, you had everything else. It was a far different situation than today. But when I go back to the SARS, we go back to the GFC, we had guys come in right after these incidents, say we're going to buy cheap hotels, we're going to buy hotels at 50 cents on the dollar, we're going to buy distress. And what we've seen is there's still a amount of liquidity in the markets. So when we look at, I think the biggest issue is the gap between buyers and sellers and what people think is the value of properties as well. And I think that's the biggest impediment, because when we're seeing, we've worked on transactions already, over the past 18 months. And what we're seeing is that the private equity guys, it's very hard for private equity to underwrite deals because their expectations in a crisis, they've got so much money, they've got to have 20% IRRs and 25% IRRs, very high levels of high IRRs. And to get that, there's only two moving parts. Either the property has to be priced extremely low, or they have to be able to put debt on it. And there's not a wide availability of new debt for these type of transactions. So people that can't put debt, they can't get the IRR thresholds. And the owners are saying, I might discount 20, 30%. I'm not pulling my pants down and discounting 50%. So private equity is not getting deals done. There's a log jam about that. So you kind of have this waiting room of properties that maybe should transact. But again, it's a gap between buyer and seller. I think hotel valuations are a mess right now because nobody really, what's the value of your hotel? What's the trajectory of discounted cash flow as a means of valuing your property and saying, what's the true value? In many cases, you've got family-owned hotels, you've got family offices, you've got conglomerates that own hotels, and they're not in a position where they say we have to pull down our pants and start selling our properties. But I think going forward, what's interesting to me, I don't think that hotels are going to be as interesting for many investors as an asset class as they have been for the past 10 years. Nothing goes in a straight line. I think, again, people are going to have to start doing more rational deals. You will see portfolio deals. I agree with James. Things are going to come unleashed next year, but you don't have really the bank appetite, be it in Indonesia, be it in Thailand, for banks to declare MPAs, NPLs as well. So you kind of have to work through the system when there's a reality check for what is the value of a hotel and how to get that deal done. But debt is the key lever for me, because if you're going to be somebody buying a hotel, somebody who's transacting now is saying, I'll assume the debt, I'm going to refinance when the crisis is over. So this is all interim solutions to a greater valuation of hotels. That's interesting for me, but I don't think we're at the end game yet. This is in process. But going forward, I think 2 years from now, what are cap rates going to be sitting at hotels? How are DCF projections going to be for stabilized trading? Again, we don't know what that is. So it's very fluid out there.
Thanks, Bill. And clearly you got the crystal ball out there, having been through the ups and downs. So some good advice for some of our participants today. Final question for Bill and James is, where will you be traveling first when the pandemic is over? And also, what's the best advice maybe you've received during this crisis or during the past crisis maybe you've been through, whether it's SARS or 9/11 or the Gulf War or whatever else, for a lot of people now who are probably who never would have anticipated this many black swans would have swum into the hotel sector globally. James?
I kind of an unfair question, because I'm sitting in San Francisco, California, as a vaccination refugee from Thailand. And I've traveled to the UK and I've traveled to Saudi Arabia. And I guess one piece of advice is, I touched on earlier all the different inconsistencies governments have. So when you do all start traveling, photocopy all the paperwork you need to have organized, because having it on your iPhone is going to cause immense frustration and delay. So photocopy all of your registration forms, all of your COVID test results, everything else. And just to shed a little light on the inconsistency, in my travels, when I left Thailand, I tested negative. When I left America to go to the UK, I tested not detected. When I traveled from Saudi Arabia back to England, it was negative, not detected. And there's no consistency. Just call it one thing or the other. And then I'll also share with you, I was trying to go to Hong Kong before they changed the rules, and I did reach the other result. I tested positive. So I've had the whole spectrum of travel. So from that aspect, copy everything and be safe. The other piece of advice is that I think people need to be nimble. Just accept the fact that when you go to the airport, your plane may not leave, and just be nimble in your business, that every day is going to be a different day, and you need to be able to adapt and react and try and stay ahead of the curve as much as possible. It's the inflexibility and hope that things are going to get back to normal is going to get people into trouble. The normal will be different. It'll be okay. It'll just be very different. So just be aware of that, I think.
No, good advice, James. And believe it or not, I played squash with James, and he is very nimble on the squash court. At least he was a few years ago. So. Thanks, James. Bill, what are your thoughts? Where are you heading off to post-pandemic, or is that not relevant? And best advice you've seen, during these crises to maybe get some of the people on the call through this crisis.
Yeah. Well, I'm certainly not going to be traveling with James Kaplan. It seems hard to say. It's a pretty risky proposition. I'll be coming to the Philippines. I'll be coming to Bohol, actually. We've been working for the past 2 years on the redevelopment of South Palms and Panglao Shores. So I'd like to see that project. It's under development again. It's one of my favorite places. I love coming to the Philippines. First stop, Bohol, okay? That's one step, okay? In terms of what I've learned during the pandemic is the amazing resiliency of the people. I've seen executive chefs being displaced from hotels now, starting out and baking breads in their homes and delivering them on a motorbike. We've seen people rethink their jobs and have small businesses. I think people's expectations, it's the humanity of the crisis. And people are saying, we don't need to make $1 million. We simply want to feed ourselves and feed our families. And these guys are getting great ideas. I think in some way, the pandemic's been the greatest opportunity of our lives to rethink how we do things, to rethink our jobs and what's important. And also it's amazing to see people starting these small, entrepreneurship has never been as good as it is right now, because people are starting small businesses and creating livelihoods for themselves. So to me, that's amazing thinking. And I'm really inspired by seeing people not reacting and just saying, poor me, poor me, poor me. They're getting on with their lives. They're recreating themselves. It may not, again, be the biggest proposition in the world, but they're doing new things with their lives, rethinking things and finding something they love and doing it. So that to me is the inspiring story from the pandemic. Great learning. Rick?
No, great stuff. Both James and Bill, and one of my favorite quotes is, maximum pessimism and equals maximum opportunity. And I think we were on a panel the other night, and we were talking about tough times, and we brought up some quotes of Churchill and the Blitz in London. I think you saw it, and both of you spent some time in London. It's when the Germans were launching the V2 rockets over London, and the British took refuge in the underground. So, and they thought that would demoralize the population. It would send people to the hinterland of the countryside. But people, maybe left the city, then they kept coming back because they liked the camaraderie. They saw the action, and they got through it. So some great stories of resilience. And I think no more resilient people do you see in Southeast Asia, no more resilient people in the Philippines. So thank you, James, and thank you, Bill. And to our audience, thank you once again for listening.